Oh, we're live, Poppy.
Do we do it?
Ooh, techno key.
I think it worked.
Yes.
Yeah, that's bothering me. Not gonna
What?
lie.
What's bothering you?
That arm. The arm is. What's
Oh,
in
you wanted to
focus.
be a
Yeah,
diva
I'm
and
fine.
have a mic boom.
Ah,
and
yeah,
now
I
we can't see your
it's
face.
it's just a beastly arm.
It's just
Nick's a beastly guy.
Yeah, it's quite girthy.
every week it's a new thing here.
Mm. My videography skills are. My alarms are going off.
I'm on the camera. Oh, I look good though.
Wow, you
Look
look
at that.
like
I look so
you
orange.
look like reality
on the
TV
monitor.
starry. Why? Why do
Steven,
you have
you're-
a glow?
Steven, you're glowing.
Ah.
Steven, you're glowing. Welcome everybody.
Welcome everybody. Welcome chat.
So happy to see you all. We just finished an incredible episode with Kevin Kelly. What'd you guys think?
Oh, so good.
I think you encapsulated it well during our little side chat while we were kind of like mini organizing the interview while we were chatting with him. I think I posted in the Discord. Armand said, "I have a huge intellectual hard on right now." So I think that
Did not know that was gonna be
that's
shared.
proof of a good podcast, maybe.
Yeah, definitely had an intellectual hard on at least half the time. The man is special, that's for sure.
Yeah, and a little tease towards the end. We asked him about death a little bit, and he had this 6-month experiment that blew my mind. My jaw dropped
Yeah.
when he told me about it. So, yeah, if
That's
you're
a
into
good
that type
teaser.
of discussion, wait towards the end, and I think you'll find it fascinating too.
I have
We can all talk about it in the Discord.
Never
afterwards.
heard of anyone doing that type of experiment.
No,
Ever.
guy's fascinating.
Yeah. I mean, just a little more teaser. So we talked about
Yeah.
my favorite part, we talked a lot about AI, obviously. He's been a pioneer in the space for a long time, but he has a very different take. And obviously we started by talking about travel, which I thought was really cool.
Yeah.
And then wrapped it with some of his life advice. So that will be coming out for the pod on Monday. So look out for that, everybody. Got some people in the house. Tunsky's here.
Kevin's in here.
Paradox is in here.
Maddie, Basil, Zach,
This is great. All right.
Adeptus.
So we're here for a money episode.
Yeah.
And it's going to be great. Pepe to the moon. And we're all getting liquidated on our NFTs is the title that Steven has selected. God, I hope that's not true.
I mean, it'll be a fun ride. I think it's gonna be interesting.
Who's going to lead off the Alfalfa round?
Yeah, you want to do Alfalfa and then some markets?
Yeah,
Mhm,
let's do that.
mhm.
Okay. I guess I'll go first.
Okay.
Is it on me? Oh, look
Yeah,
at that. There I
you're
am. I'm not. I don't know why you guys put the guy who doesn't face the video monitor on the video switching.
It'll be okay.
But
1 and
it's
2,
all right.
baby. 1 and 2.
Yeah, we'll figure it out. All right. So I bought a lot of GLP this week.
Okay.
Yeah. Are you familiar with GLP, Armand?
GLP. Can't say I am. No.
Yes. GLP. GLP is like the. Are you familiar with the GMX exchange at least?
Yes.
Awesome.
Yes.
We did a whole
I'm with
episode
you.
on it. So
We did. It was a great episode. If anybody wants to tune in. But anyway, GLP is interesting. It is basically like the liquidity pool of GMX, and you can sort of mint it with stable coins, with Bitcoin, with ETH, even with like Link and Uniswap. But mainly, it's like a pool of half Bitcoin, ETH, and then like half stables. So it's like a 50-50 thing of crypto. And the yield on it lately has been like outrageous. Like it's been like 23, 24, 25% yield. And to me, I'm like, man, this is like a really interesting assets to be in for this year, which we've been expecting to be kind of choppy, kind of up and down and terrible, like sideways, violently so perhaps. So yeah, I've been kind of buying more of that. And the other thing that's interesting to me about it is that there are all these protocols coming out now on Arbitrum. And we talked about this actually, like maybe back in December. I think I was like, this is going to be an interesting season once we have all the protocols that let you use GLP as collateral, because then we can start being really degenerate with it. You can lever it up. So I've taken my GLP and I've put it in like 5 or 6 different protocols on Arbitrum that let you use it. I don't want to stick it all in one.
Right.
but they let you like lever it up or whatever. I even put $10,000 or so in one that's just super new. I didn't even like look it up. It's probably got like 1 million TVL, and it lets you lever up 17x on it. So I'm probably liquidated on that already. Doing all sorts of interesting stuff there. But yeah, I'm like really considering this now as a part of my portfolio I want to have. I think GMX kind of has Lindy now, and I don't think it's just going to go to zero immediately. Thoughts?
Can you remind me of what the downside risk is? Because I remember holding GLP as if you were kind of playing the house, right? And so what's the downside effect of GLP and how you're going to get cascade liquidated in this scenario?
Well, you're not going to get liquidated as the house, right? The downside, well, the downside is devs just rug you,
right?
Which, you know, that would be bad. Always possibility in DeFi, but let's assume that probably won't happen. The other downside is that traders win, and they win a lot. Now, I've traded a little bit on GMX. The fees are outrageous. Like, it is truly remarkable that these guys are just taking like $50 million degen long positions and paying like these fees, because the fees are insane. Like, you're paying funding on both sides. There's a huge fee just to like make the trade and to close the trade. So the deck is really stacked in favor of people who own GLP, but you can lose. Like, if a couple of apes just go max long right before up only season and they just hold that position, yeah, you could end up losing money. So that APR is worth noting is not guaranteed, but it's sort of like being in the house in a blackjack game where you pay like 5 to 4 on blackjack or something,
right?
You know,
right.
So kind of stacked in your favor, but you can lose.
And what are you doing with your yield? Compounding or what?
So there's a couple strategies here. I'm mostly, so Beefy, you know, Beefy, the yield aggregator. Yeah. Beefy is kind of interesting. It's become this like asset that itself is getting collateralized a lot on Arbitrum. Like, a lot of these protocols use Beefy GLP, which is basically just like an auto compounded GLP. So we're kind of getting back to the old DeFi summer where we're putting like leverage on top of leverage on top of leverage on top of leverage, and it's, you know, it's good that we're back in a way, although, you know, stuff might happen.
Right.
But I think one interesting thing is to take it and 2x lever it. So not with your whole account, bear in mind, but imagine you have like 100K in stables in your account and you want to be long $20,000 worth of crypto. Well, you can buy $20,000 worth of GLP, which is 50% like ETH basically in Bitcoin, and then you can lever it 2x. So then you end up with 20K in long exposure, and now you have an asset that's paying you maybe like 35%, because it's typically a pretty high interest rate to lever it. But even if you're getting paid 20 and it costs you 10, it's call it 30%. So kind of interesting. You're long basically 1-to-1 crypto, and you're getting paid 30% for the pleasure.
Right.
So interesting thing I'm experimenting with. Not financial advice. If you get liquidated doing this, you have nobody to blame but yourself.
And we're going to talk a lot more leverage later when we talk about Blur's new lending platform. I guess I'll go next on Alfalfa. So I have a anti-Alfalfa.
Ooh.
I got an L to share.
Yeah, we need a name for that.
So, yeah, I mean,
I still think it's alpha.
All right, it is.
Alpha.
Listeners of the pod know that I'm a big fan of multifamily real estate. I think it's a great way to build wealth over a lifetime, tax advantage, good returns, provides income. And I had one of the properties come back, and it was not such a good return. So I invested in this property in 2016. And as context, all the properties I invested in 2016, amazing vintage. Like, so good.
I love that you call it a vintage.
Yeah. All of those have been like minimum 25% annual returns. Have refinanced out of one of them. And they continue just to be kind of like triples, I'd say. This one, heard from the general partner that after all said and done, it's been 7 years. I'm going to get back exactly 100K. So I put 100K into it. I'm getting back exactly 100K. And so we start talking.
How many years?
7 years.
7 years.
0%
Mm.
annual return.
I'm not no math genius, but I believe
and
that's not very good.
You know, that again, compared to the benchmark of that vintage, it's far below. Like you're like, oh well, at least you got your money back. No, the par should have been, you know, a 20% at least return. What happened in this one is apparently there was some kind of lawsuit on the property, and it took all of the returns, and it was settled in arbitration. And so these things can happen. And so I bring this up because I'm such a proponent of it, and I don't want to just talk about all the good things. I want to talk about the scenarios where it can be not so good, and what you should be aware of the possibility when you go into a general partner. I will say that this general partner had some learning lessons. So this deal was unique in that it wasn't a general partner that was a professional company that did this for a living. They had a company already. They do multiple deals. They have, you know, a full team dedicated to this. This was a smart entrepreneur who's been successful in multiple different businesses, and he found a very undervalued property and was like, we're going to increase net operating income. And he actually did do that. He increased net operating income significantly. But when you don't have the professionalism of that business surrounding you, lawyers, property management, I mean, like everything else that goes along with running an apartment complex, you tend to have some vulnerabilities. And so it looks like in this one, the lawsuit sucked the returns out of it. So I don't know, learning lesson.
There was an infestation at the winery.
Yes.
Because
spoiled the vintage.
Because he was a local, a small winery.
Yeah.
He didn't have pesticide control, and maybe he lacked some hands on deck that could have prevented and or better navigated some of these things. I just want to roll with this vintage.
Yeah, I'm okay with it.
Oh,
can we stop the can we stop the metaphor?
Why?
I don't know. I just feel like the metaphor is going off a cliff at this point.
Okay. Wow.
Give it time to age. Give it time to age.
Wow. The next time Steven even tries to do something like that, I'm gonna just gavel it like an Eric. Well, I'm just gonna gavel it.
Yeah.
Well, Eric's not here, so I have to insert myself with random
I'm gonna go
gavels.
Back to my analogy.
Yeah.
So there was an infestation, and there was no one there to handle it.
Yeah.
I like it. It makes sense to me.
Yeah, and I will say along the way, along these 7 years, I probably got 5 investor updates where normally these professional companies, like on the quarter, every quarter,
Yeah, so
here's your
can you
distribution,
summarize
here's
the
your
flags? You smaller sort of like non-professional.
Yeah, it was a one-off, but with a
One-off.
smart entrepreneur.
Mm-hmm.
And then, you know, a lot of the red flags came up after the fact.
Of course.
You know, like,
of course.
oh, you missed a quarterly update. That's weird.
Yeah.
The K1s were consistently late.
Hmm.
So instead of, you typically receive them by March 15th, so you can file on, you know, April 15th. This guy was like habitually every year late. So that was red flags.
Hmm.
So anyway, I think the lesson is stick to the companies, the firms who do this for a living, who have at least a 20-year track record, who've been through multiple cycles.
Like, what if you were to turn that into a bit of a checklist? And what if, as part of your due diligence process, you were able to talk to LPs in other sort of like, and within other, like, I know you have like a few general partners you like to work with, but could you talk to those LPs and previous investors and say, like, did these things happen? Did you get your K1s on time? Did you get good updates? Did you receive the returns that were in line with the vintage of that year?
Yeah, and
consistently.
And even, I mean, they didn't have any previous deals, right?
Yeah.
This was.
But going forward, could you?
Yeah, totally.
Okay,
totally. And I think you kind of should do that kind of research before investing.
Hard
6
to know, though,
figures
right?
a pop.
This is the alpha, right? I think this is the wisdom.
So anyway, I'm trying to decide: do I like hire a law firm to dig into, like, because there wasn't much deals about the lawsuit. Should I pursue this guy, or should I just say, fuck it, give my money back? I got cash to DCA into some more crypto. And
so you don't even have a lot of clarity on whether or not this was a thing that was like negligence or.
No, I even asked him the other day. I said, hey, send me the summary judgment. Like, send me the actual like legal document explaining the judgment. And he's like, oh, it's such a long, sad story. Like, I'll tell you over the phone about it. You know, I'll give you the whole details. We're closing on May 11th. And I'm like, So maybe I take the money back first and then kind of pursue possibly.
Yeah.
But then you kind of erode the returns by like going down that path. And I don't know. Anyway, so I wanted to share with everyone is like, okay, it's a possibility. And overall, even with that 0% annual return, everything's still good.
I'm sad that I'm sorry that happened, but I'm glad that it happened within the world of just multifamily rental properties, real estate, because knowing that there are these L's even in a great year like that just gives me a sense that like, look, it's not always going to be a triple. It's not always going to be a home run.
Right.
There is variability here, just like in any other asset class. I just think I think it makes it a little bit more real and like, okay, cool. Like this is not just some like fairy tale asset class.
Yeah. And I think it's a good time to watch a lot of these general partners this year because a lot of them have been riskier than they should. They've taken floating rate debt, which is kind of like a big no-no, at least in my book. And so watch this year. And if you guys are interested in it, towards the end of the year or even early next year, when it might be a better time to get into the asset class, you can ask these GPs, how did you do last year? Did you have any that stopped cash flows? Did you have to commit any capital? Did you have to emergency refinance your building? And I think those are going to be the tough questions you need to ask kind of going forward.
I feel your pain. I am up to 1.7 million in legal fees.
Oh, is this on
the
my
property deal now?
Wait, I thought the legal stuff closed.
Or it appeals now, so it just keeps
wow.
going. But
wow,
yeah, so that was a $3.5 million building. It's got 1.7 million in legal fees now.
Ouch.
Over 6 years. It's like $20-something thousand a month in legal for like 6 years. It's been insane. So yeah, when these things go bad, it's like pretty ugly.
My whole like thing has always been I've been fortunate to be able to avoid any sort of like legal situation in my life that's been very long or drawn out or ugly. And every time I've had the pressure to force one myself, I've always end up passing and moving on because like the mental cost of it to me is infinite. Like I just don't think I would be able to mentally handle something that drags out for so many years. Like that's one of my biggest fears is anything dragging out for too many years. Even good things sometimes I don't want to drag out for too long.
And I will say, Stephen, not to pile on your scenario here, but like that's why I like being a limited partner because my risk is limited to the amount of money I put in, not anything additional. So, if you own real estate, you're exposed beyond whatever you put into it, obviously. So
yeah, interesting.
I do like the limited partner part of it, limited risk.
Yeah, good reminder. I like this here. Botluck says spin up an ETH validator with the money.
Yeah. All right. You got anything, Armand, or should we go to...
Yeah, sure do. You want to make sure not to shit on any of my analogies when I go here? All right.
I absolutely cannot promise that at all.
I know you can't. I love you for it. So I've got something interesting. Actually, I've got two things. I have a business idea for any technical entrepreneurs out there looking to try something new.
Ooh.
Maybe you're on the sidelines waiting for the right idea. Maybe you're bored with what you're doing right now. Maybe you hate your job. Want to have an office space moment, something like that. So there is a tool there's a software called TubeBuddy that we know.
Yep.
TubeBuddy is a YouTube tool for creators, for YouTubers. My idea for you is to create a better, which is not hard to do, AI-driven TubeBuddy. TubeBuddy comes with a whole host of features. I would focus on the biggest pains that exist for content creators, which generally come down to a handful of things. What makes a great YouTube video? And by the way, if you take one look at this software, you will see what a pile of garbage it is immediately.
God. It is so freaking janky. Sorry.
By the way,
sorry, TubeBuddy.
Apparently,
just lost a potential sponsor.
Apparently, and I forget his name. Apparently, the founders in San Diego, dude.
Oh no!
If you hear this, please come sit with us and talk to us because either I'm gonna work with someone who's gonna make something better, or let me help you make this thing better because it is awful, and you have an incredible opportunity on your hands. So, just in case he ever listens to this, it is a really, really bad piece of software. However, the pain in the industry of content creation is so severe that the solution that TubeBuddy offers, even at its extremely basic level, is so valuable that it's a multi-million-dollar company. So I think that there's a huge opportunity here and what are the biggest problems for YouTubers? And again, if you're excited by this, go and do a deep dive and take a look at this and see, and you'll see that, in order to create a great YouTube video, which we're learning as well, you need a great thumbnail and you need a great title to get a high click-through rate. Once you get a click-through rate that's high, you want high watch time. So what's that? You need to help people do two things: get the click and keep people in the video. So if you help people create great content and get the click, you've done your job. Now, in order to do that, there are so many features like keyword research and thumbnail testing and all sorts of things that are possible. And if you were to utilize AI to start to generate titles, to analyze the top performing titles within a topic and extract what a top performing title might be that is unique on that search or would automatically qualify to get the video suggested and is proven from a perspective of analyzing titles to perform, along with image generation, which is now possible with AI, of course, and is going to be 1,000 times better than any generated image that your graphic designer could create, right? Using Midjourney, using Dolly, using whatever the fuck you want. I mean, we're talking about a huge opportunity here. So I think that there's a lot of opportunity for a technical product-led company to revolutionize YouTube content creation tools, to take most of TubeBuddy's market share, and probably just as a lifestyle business, do $10 to $20 million a year easy. I tried to kind of like look into what I think TubeBuddy does. It's probably in that range. So I think you'd quickly get there and go far beyond. TubeBuddy does not have the distribution that it could because it's just not the best tool. But they have an affiliate program. If you look at their website, if you look at their onboarding process, it's from 2003. It is bad and old and broken. I can't even get it to connect to our Alfalfa podcast channel, and I am technologically
Techno King.
I'm okay. And I literally have had 17 tickets going back and forth with this company to just get it to connect to our channel. I can't even use it. I can't pay them enough money to just solve the problem. So I'll also add that if someone out there is listening to this and is like, that sounds awesome and I want to do this, I would potentially, for the right person, also be willing to advise the company and help, because obviously what I do is in the world of content with Steno. What we do is a podcast, and we're now focused on YouTube. I think that I could potentially help here. So
cool.
That's my Alfalfa.
I like it.
Yeah.
That was beautiful. Thank you.
Yeah. It wasn't
I
meant to be
changed the title of the stream to TubeBuddy Sucks.
wasn't meant to be a moral. I mean, do you have any thoughts on that?
Well,
I
think it's a great idea.
I want some kind of reaction.
I think it's a great idea. Well, you got me thinking about how my old like Facebook ads company could have been run by like one or two people with like AI, and like how AI could just do the entire process basically of like creating and split testing, not just like ads and images, but like making videos now, landing pages, just the whole thing, like the whole iterative process of online direct response marketing is just it's just AI. It's like it's just all about iterating and changing stuff. And because sometimes the stuff that works is totally stupid. Like it doesn't make sense ahead of time. Like a lot of the great campaigns
That's right.
in marketing are just like sometimes we had like great ads where somebody like misspelled a word or something. Right. And then the ad blew up because the entire comment, there were just tens of thousands of people like correcting the grammar. And then the Facebook algo was like, this is a great ad. We got to give them cheap clicks. And it just kind of fed on itself. So yeah, it's a great industry for it. Marketing in general, I feel like it's just going to be totally upended.
Big time.
I love it. I love it.
I mean, I like it because, no one's filling the gap. You can modularize it out to get some first customers, but also I always like the software as a service valuations. I mean, they get valued off ARR,
Right.
annual recurring revenue, not
6
EBITDA.
to 10,
Yeah,
X, like,
even 6x.
yeah, would be
Nice.
Yeah. So hit me up. Email me if you're interested in this.
There you go. Open offer.
Armon@steno.ai.
I heard it'll even give you $1 million.
Nope, didn't say that.
All right. So should we move on
Yep.
to the markets?
Yeah.
All right. So today, FOMC day,
Papa
a day that is getting more and more lame, I got to say, with every month. This was the lamest of all.
Which is a good sign.
Yeah, I think so. 25 basis points. Everybody expected that. Market did basically nothing on it. Did nothing for most of the presser too. And then S&P traded down, crypto traded down. And then for some reason, Bitcoin decided to spike right before I got here and my shorts are underwater. But Nick, you listened to the whole presser, I think, right?
Yeah.
As did I. But I'm curious your thoughts on what you heard.
Yeah, I mean, I think the market, we're all kind of expecting a pause or openness to a pause, and I think that's what he gave the market. But I think it maybe adversely reacted to the fact that he stayed true that he does not see any rate cuts going forward. And if you look at what the market is expecting, I think they're expecting it to remain flat for the next 3 months, and then some severe rate cuts down to like 3.5%. In kind of like a stepwise function after that. And he was pretty clear he does not expect that. But, I mean, who knows what could happen? Obviously, they're going to look at some data if things deteriorate. Like if you look at what's going on in the economy now, if that continues, there certainly won't be decreasing interest rates, and they could certainly have a surprise increase later on in the year. But if things start to deteriorate faster, I guess he could certainly cut rates, but I think they seem pretty resolved. It was a unanimous decision to raise 25 basis points today, which is kind of interesting. So it seems to be everyone's in lockstep on the committee.
Yeah. I was kind of thinking it would be like a relatively hawkish conference. And I think it kind of was, in that the market was like fully pricing in some inkling of like a guaranteed pause. Like I still think more likely than not they pause in June, but like Powell made it not sound at all like a slam dunk, and he used I don't know. Inflation seems pretty sticky to me, a lay person who thinks about this a lot. I don't see it going anywhere for a while. Like, so I think if they are cutting rates by the end of the year, it's because everything is really going to hell.
Yeah, that's not going to be good.
The scenario you want anyway. So yeah, I don't know. I think like liquidity is kind of like an issue over the next couple months.
Yeah, let's get into that.
Yeah, so Yellen, I don't know if you saw this, Janet Yellen, is she Treasury Secretary?
Correct.
Is that her official title?
Correct.
Can't keep up anymore. Yeah, she was like, yeah, we have until June 1st or we default on our debt. So chop, chop, which is kind of like, whoa, people were not really expecting quite the deadline there. So there's some shenanigans going on. And yeah, I think the default wisdom right now is that the issuing of all that debt is going to fill up the TGA, the Treasury General account, and just generally have like a negative impact on liquidity. Like the effects of quantitative tightening all year have been pretty muted because of these dynamics, because of the bank pseudo bailout, right? But all that stuff is gonna, I think, reverse now over the next few months. So probably looking at a negative liquidity environment and a maybe somewhat resilient, but probably on the decline economy. So
yeah, I mean the political dynamics coming up to resolve this issue, which is what we need to happen within the next 28 days, are kind of fascinating. Wow. We don't need to like dive too much into them, but on the Republican side, you have Kevin McCarthy leading these negotiations, and then on the Democrat side, you have the president. And even on McCarthy's side, he doesn't have it all together. There are sections and factions within his side. You kind of have like the Tea Party-esque group of the Republican Party saying they will only sign on if there's cuts, specifically repealing the Inflation Reduction Act, which is going to be a non-starter for Democrats. So Kevin McCarthy's going to go negotiate with Biden next week. He's going to the White House, and he only has so much room to acquiesce, or else he's going to lose, the votes that he needs to fulfill his side of an agreement. So it's going to get like the next 3 to 4 weeks are going to have a little political spice to them.
Spicy.
Yeah.
All right. So back to crypto.
Yep.
All right.
Yeah.
Do you guys own any Pepe?
Yes.
Nope.
Oh, we got a no Pepe over
Nope.
here.
Or,
Let's
okay,
get the camera on this. No, that's the face of it's the face of a no Pepe right there. That's what no Pepe does to your face. Yeah. Anyway, for those unfamiliar, the meme coin of the year has been Pepe coin. It's many thousands of a percent up to date. To date, I didn't jump in until last week, but I promptly did a 3x anyway after I jumped in with a responsible amount of money. Unfortunately, I'm sure Carne Asada Chris was not so responsible with his.
Oh no, he live aped in front of me, and I knew what he was doing. And I was like, all right, well, to each his own. Monday morning.
Yeah.
Monday morning. We randomly caught it at a nice little bump. I was watching it Saturday and Sunday, and
he did Monday
morning.
Oh wow.
Yeah. So I think it was like, I don't even know how you even say the price. It's like, I don't know, 6 zeros or whatever.
Yeah, the price has like 15 zeros in front of it.
Yeah. It was under some zeros in the number 1. It was 9 something.
Imagine if it goes to $1.
It will be worth more than all of the real estate in America. That would be the most valuable asset class on the planet.
So you're saying there's a chance?
So I don't even know how to play these things. Like, so obviously you play the ride, but then do you rotate into other narratives as they pop up and just kind of like ride momentums, or do you just say, hey, I'm going to play this until it gets listed by a centralized exchange and call it a day?
Okay, so here's my take on this. I was hanging out with Amber Saturday morning. For some reason, we were talking about meme coins, as I'm sure she loves to do. And I was explaining to her why I just aped into this frog coin that doesn't do anything. And my thesis on it was like, look, this is basically an insurance policy on me killing myself next cycle because it goes to 30 billion market cap and is the next Shiba. And then everybody on the podcast has to listen to me talk about how I should have bought this thing and I didn't buy it. And I'd be up 1,000x now. And now I'm just coping. So that's literally the only reason I bought the coin.
The pain of losing it all is less than the pain of FOMO, essentially.
Yeah. I'm sleeping so cozy at night right now. Even if it goes to 0, don't even care.
That's a hefty insurance premium there.
I didn't buy that much. I didn't buy that much. I wish I did now, but I didn't buy that much. I balanced it out pretty well, I think. So
we got some Pepe fans in the chat.
Pepe fans in the chat.
We have quorum on number of people in the chat who have
you couldn't pay me to touch that.
I will say there is like this thing where
it's not even on an exchange yet.
I mean, there is a price that
I'd probably take profits when it's listed.
There is a little more. I mean, you're used to this, but I'm not. Where there's a lot of mental overhead when you hold it, even if it's small. And
it's actually.
And you're like, well, I got to watch this thing because it's not just
watching it all day.
Thing I believe in long term.
You bought too much of it, then?
No.
If you're not trading it, then what do you do?
Yeah, because you have to trade it on some short time period. You can't, or could you?
Are you really only playing it for that Shiba scenario where the next cycle, like you're actually intending to hold this until the next cycle? Or are you trading?
If it goes to 1 billion, I will take a bunch of profits.
Okay, so you have a longer view on this than I think most people do, which I haven't heard you say very often. But I guess that's the way you're treating this trade. Makes sense.
I already said it wasn't a financial investment. I said it was an insurance policy on me hating my life very, very badly. I do think that this thing has a chance to, maybe not, probably not now, right? But I do think next cycle, this is what happened to Doge, right? Remember, it went up and then it just completely died. And it was just like, and then the chart was just dead for like years, right? And then one day during the last bull run, full moon status, right? Just boom. So I do think this has a chance to do the same thing. I mean, it's, what is it? Hey, like 700 million market cap, right? So it's sort of broken the sound barrier a bit for the meme coins. Like I think there's a good chance it doesn't just go to zero and die forever. Like these things have a way of coming back. I don't think this is like the environment for like a meme coin to go to $20 billion right now. But like depending on how this shakes out, like I don't know, like 9 months from now, I might be looking to accumulate some of this like in my bags when I'm like putting the bags together for the next cycle. If the year plays out like I think it might, which it might not, So I think there's an investment thesis for it. You're a Doge man. You get it. You like memes.
Yeah. I've been rethinking things though.
Oh no. Tell me.
I don't know. I mean, I'm not a professional gambler like you've stated that you are and have been or were in the past. I think you, to some degree, would still identify.
That was part of his speech to high school students.
He said, I'm a
professional gambler.
Professional gambler. Like everything I'm about to tell you is terrible. But like one of you, I remember you said that. You're like, out of the 36 of you, like 1 or 2 of you might really enjoy this and get something like where.
I still can't believe I did that.
No, it was great. It was honest. It was honest. I don't have that risk tolerance appetite. I never have. I'm like a steady rise, kind of like I really like watching the steady rise. I really don't like the dips. And one thing that I had to go through in this cycle was like, I had to rethink my whole investment thesis for sure, because I think everything has changed. And I think the days of just being able to accumulate assets that you like and just go, all right, risk on in stocks and maybe Bitcoin and Ethereum, and then like risk off and like bonds and I don't really know what else, T-bills, is maybe still possible, but like I don't know if you can withstand that, how long a person could withstand that over how many years of just watching their portfolio go down by 80%. So I don't know. Like I did a lot of that stuff in the last cycle where I was like, yeah, I'll go into Doge or I'll go into this or that. And I'm happy I did a lot of those. I've had plenty of wins. But I just don't have the gambling appetite, and this is pure gambling. Like, this is just pure.
Well, it's good. I think it's good to know what you like to handle and what you don't. That's
the biggest reason I didn't buy it is what you said about time.
Yeah.
I mean, 100%. I was like, if I buy this thing, kiss hours of my day goodbye. I mean, like,
it's addicting.
I can't do it. I wouldn't. And then I try to look for another meme coin after that. Because usually when there's one, there's another, right? Immediately after.
There are other frog coins.
Yes.
To ride
Somebody
the waves.
launched a meme coin I saw entirely using Chat GPT.
Turbo.
Yeah. And when I saw that, I was like, wow, we could have easily done that. How hard was that idea? And it's like, I left. When I left today, I looked at it, it was up like 300% at like a $80 million market cap already.
I don't want to respond to SEC letters in 2028 about your 2023 meme coin. No thanks. But I like.
I wish we were a little more unethical sometimes.
No, you can ethically launch a meme coin.
You can also ethically launch an NFT. Well, I don't think it's ethically. Like I'm playing with what you're saying. Like all those people that had roadmaps and just were 19 years old and went to the club and.
That's unethical. Like if you just launch a meme coin and you're like, this coin is fucking stupid. If you buy it, you'll lose all your money. I'm not doing anything with it. I've renounced the contract. It's out there. Goodbye, drop mic and walk away. That's not unethical.
I like Marty McFly's perspective in the chat saying, he bought it because he wants to cheer along with the timeline. And I kind of liken it to craps, because craps one of those gambles, those like gambling games where you're playing with the whole table, and when everyone wins, everyone's fucking happy. When everyone loses, it's you win and lose together.
That's like the same reason I didn't. I like that reason a lot. It's like the same reason I didn't is the reason he did, and that makes complete sense to me. It's like if you are going to intentionally choose to cheer along and spend that, put a little bit of energy toward like what the movement is right now, it's a perfect reason to buy. It's an incredible reason to buy because you get to participate.
Yeah.
I just this week made the decision. I was like, I can't right now. And now I'm, calling it gambling as a way of just like moving on from it. I mean, I know what I'm doing and everyone knows what I'm saying.
Yeah.
Because if it at a different time, different place, different meme coin, I'd be like, oh yeah, this is fucking great. I bought it. I made so much money. So I call myself out there. I know what I'm doing, but I think that it depends a lot on like the timing of the market. And this one scares me in the sense that I think a lot of people are going to get hurt by it. That's all.
Well, speaking of other things people are going to get hurt by, should we talk about Blur lending platform,
Oh,
maybe.
nice segue.
Thank you.
Wow. I was
Has
gonna
to call every segue, doesn't he?
When they're good.
when they're good. I like
Okay,
to.
when they're
We
good.
I
have
like
plenty
to
of
acknowledge
shitty
the good
segues in
segues.
our Kevin
That's
Kelly
good. I was
interview.
gonna get into one more like Cardano zinger there, but I guess we can go on. We haven't had a good one in a while actually, which is good because it's been pumping a little bit. So anyway, yeah. So big news this week. Blur, the super high techie new kid on the block NFT platform that's been nuking all the NFT floors with its liquidity mining program. They launched a lending feature called Blend. That was the easiest name job of all time, huh?
Yeah.
It's live on just 3 collections now, I think. Wrapped CryptoPunks, Azukis, and Miladies.
Milady.
Milady. I don't know, no, Milady or
I haven't heard of Miladies, but I like
Milady.
the name a lot.
Yeah, they had some controversy and they came back from the dead, basically. You should look into it. Interesting story. But yeah, they basically did like a super high ticket item, like Punks 50 ETH flourish, Azuki's probably like 17, and the Miladies, I don't know, like 3, something like that. So kind of like a high, medium, low tier thing. Immediately became the #1 NFT lending protocol. I think last I checked, I think there's something like 9,000 ETH had been lent out, maybe over 10,000 now. So pretty good numbers in the NFT lending space. It's not like a super
But
huge space.
NFT lending's not anything new. So NFTFi, you're familiar with, right? That this has been a thing for a little bit. So do you want to give a little primer on NFTFi, and then we can talk about why Blur is different?
Yeah, so I guess in the NFT lending space, there's 2 types of protocols. There's peer-to-peer and peer-to-pool. So peer-to-peer is like NFTFi, right? It's just really this kind of old school Craigslist style marketplace. It's like have ETH, want 35% APR, willing to give you 20% the value of your ape. And then, the people who have NFTs can kind of take those offers, but then you're making this one-on-one deal where you sort of negotiate terms, right? And the benefit of that is there's a lot of flexibility to the terms and everything. You can also see somebody's ape has a rare trait and you're willing to make a bigger loan or something right like that. The downside is there's like a lot of friction. It's not super liquid, not a lot of composability, whatnot. We also have the peer-to-pool models. The most popular one, I think, is probably BenDAO, which was made famous a couple months ago from the mass ape liquidation, which is one of the downsides of of these things. But BenDAO has a model where lenders just pool their ETH together, and then borrowers just take ETH from the pool. And the benefit of that model is there's like a lot less friction, very very fluid with the borrowing and lending. The downside, not a lot of flexibility there. You're basically lending off floor prices. The interest rate is the interest rate. The duration, whatever it is the duration. So that's the gist. Blur did something interesting that's kind of like a blend of the 2 models. I don't know how much you guys have looked into it, but it's a little tricky to comprehend because they're like perpetual loans. Like they have no expiration. So the way it works is, as a lender, you say, hey, I'm willing to lend at X APR on punks up to, this value, so to speak. And then everybody does that, right? And then you end up sort of with like an order book then you can look at it visually, like all the people willing to lend at the various like kind of percentages and the various like amounts of like the NFT value. So as like a NFT owner, it's very simple actually. You just come in, you're like, I want to borrow, and then it just shows you the best offer in the book and you can just take it.
Right.
Where this gets weird is that anybody who issues a loan can just call the loan at any time. Like there's no duration on the loan when it has to get paid back. So then you enter this weird period where you have, I think it's 30 hours or something like that, roughly a day. There's like a Dutch auction that happens, and it basically says
loan refinancing.
Yeah,
mechanism,
like,
right?
hey, who wants to take over this loan? And it starts the bidding at like 0%, and it goes all the way up to like 1,000%. And the idea is that at some point somebody's going to come in and assume the loan and then you won't get liquidated because for like 1,000%, surely somebody will want this loan in normal market conditions, right? But if for some reason nobody takes over that loan, then the lender takes possession of the NFT, then you sort of get liquidated. So it's a really interesting outside the box model. I like it a lot. I think Blur is like pretty innovative. I think they have wrecked floor prices, but I think that's just because floor prices are just expressing what they truly are now. And before they were kind of like, there wasn't a lot of liquidity in the market. So it kind of obfuscated what the true floors were for these things. So I'm not so worried about that. I don't know. Do you guys have any initial thoughts on this?
Yeah, for sure. I mean, like the key difference between Blur's lending platform and the other two you mentioned is that they have a token that's worth a couple $2 billion that they can use, and they're using it to incentivize people to make loan offers. And that seems to be the key differentiator in why all these new mechanisms actually work. So, you know, as a user, I was like playing around with it, and you can go in and purchase an NFT there, and you might see like a CryptoPunk that's normally 54 ETH, and then there's another button that says, would you like to buy this for 4 ETH? And then it gives you an interest rate. And some of the interest rates for a time, I don't know what they're at now, but they were near 0%. So why is someone willing to loan you money for 0% interest? Because Blur is massively incentivizing these loan offers with tokens or points that you can, I assume, convert into tokens. And it looks like the loan offers are way more heavily weighted in terms of rewards than when they were doing the bid incentivization. So
Yeah.
you can make quite a bit of money by just making loan offers.
Or just loan to yourself or something. I don't know.
Yeah.
I'm glad you brought this up actually, because yesterday I did just what you described. I went in there and I bought a CryptoPunk basically on layaway.
Okay.
Buy now, pay later for like 3.8 ETH or something.
And what was the interest rate?
0%.
So, okay, so this is perfect. So can we play this out?
Yeah, sure.
Okay, so you don't actually own it. It's not in your wallet.
Correct.
Correct.
Well, I mean, I can't. It's not mine. I can't move it.
Okay.
Like, I have to pay off the whole punk, and until I do, it's technically in the smart contract, you know, the Blur smart contract, and it can be taken from me.
Okay, so let's take both scenarios. Let's take a few scenarios. One, CryptoPunk prices. Your punk goes from 54 to 34. What happens in that scenario?
Okay, so well before that happens, the lender is immediately going to call my loan, and there's going to be a Dutch auction triggered.
Okay.
And then somebody will have to come in and basically bid to take over that loan. And if it goes from 54 to 34, even at 1,000%, I don't think anybody's going to take that loan.
Right.
So my punk will get liquidated, and I will be out the 3.x ETH unless I, before the 30 hours is up, go and just buy off my whole punk. Or potentially, I think I can also take out another loan at like a higher price maybe, and then put more money down or something like that.
Okay.
I'm not advocating this as an investment, by the way. I just wanted to do it for I was just like, I should understand what I'm talking about, and why would I? Okay, I'll buy a punk for. I also thought, and I want to see what you think about this. Like, I also thought this could be like very bullish for the market. Like, to me, it seems like to me like the very left curve thing is like, oh, punk now 4 ETH, more people buy punk. You know, it's like Pelotons. They sold a lot of Pelotons, right? Because people were able to break it apart into multiple payments. And same thing with like houses. Like a lot more houses get sold, and houses went way up in value.
Is this like afterpay for NFTs?
Buy now, pay later.
Yeah,
for sure.
Yeah.
I don't think it's bullish, but let's continue down these scenarios. So we went through the scenario where the price goes down. You probably, if it goes down enough, you get liquidated, the punk goes away, you lose your 4 ETH. If punks go from 54 to 74, you could sell it for a profit, and you didn't use that much capital.
I could realize like 600-700% of my investment, and then I haven't lost
really
anything.
Good for that.
Right. If the prices go up.
Yeah. Again, gambling, but if you can time the market on certain NFTs,
and
buy them at a discount, and time well before the next
Sure. If
Yeah.
you buy it on the bottom
Yeah.
per se. So a third scenario.
Like I could see it working very well before the next run.
Sure. Say third scenario though. Price stays at 54 ETH.
Yeah.
The lender calls the loans like, I want my money back. What happens? Same thing. Auction ensues. You're like, I don't want to.
Yeah,
don't
anytime
wanna
the
buy this
lender
ETH.
calls the loan, there's a Dutch auction that
Okay.
ensues, and then you have. I think it's 30 hours. I keep saying 30
So as long as these
hours, but-
incentives are in place, the loans are going to be cheap.
Yeah, it's a weird. You're basically being subsidized to go leverage long on punks right now by Blur, because people are willing to give you loans at almost the entire value of the punk. There I am for for 0%, because they're farming the airdrop rewards. So it's kind of a weird thing. I was like, yeah, I'm just gonna do this.
I guess I worry about, I mean, you're turning lenders into airdrop farmers, essentially, right? They're just loaning out money, and there's some risk, obviously, but they're farming Blur. My worry happens when, let's say, prices go down, floor prices go down, because this is not necessarily attracting new people to the ecosystem. Like I saw a YouTube video that had some stats that volume skyrocketed, but the number of unique users interacting with these 3 projects did not go up. It actually went down. So it's not like you're attracting more people to the ecosystem. So let's say NFT prices go down. These lenders are airdrop farming. They don't actually want the JPEG. So what are they going to do if they come in possession of, they don't want a CryptoPunk. They're going to happily let it liquidate. And you could see, like, I could imagine like a cascading scenario. And there's already like 40 CryptoPunks in there. So it's not like just one of them liquidates. If prices go down, I imagine all of them do. So you could see a wrecked floor price in that scenario. Would you agree, or?
I think the way that Blur is set up probably makes it harder to get liquidated than some of these other protocols. I think it is very friendly to the NFT holder, which I think it should be. And I think they did a good job of designing the UX. It's like kind of, a little more functionality and everything. And it's more nuanced for the lender, and like the borrower, just like, there's just a button that says like, basically like, buy this for 3.
I like how they did that. They made it easier. Yeah.
So, but yeah, I mean, anytime you just introduce a bunch of leverage and financial derivatives into a novel ecosystem, especially with a bunch of people who may have come into a lot of money and may not be like super financially literate in the same way that like experienced like options traders or something are. No offense, NFT bros, but like there's a lot of people out there who are very wealthy because they bought some JPEGs, and the NFT part of the ecosystem is sort of notorious for fucking shit up, more so than other parts of the ecosystem. So I'm sure there will be some sort of like D-Day event at some point.
Was this?
Always, always is.
Space.
So yeah, it'll be there. I don't know. I think long term this is good. This type of innovation is good for NFTs and the ecosystem in general. I think it's cool that you can get like instant liquidity for an asset like punks, especially as they become worth like houses.
Yep.
And stuff. Like it's kind of interesting. Like when you talk about like something like pudgy penguins, those are still pretty expensive. They're still thousands of dollars. They're like buying a few Pelotons. I know for some of the the deep pocketed in the ETH ecosystem is like, it's a couple ETH, right? But for normal people, that's like a lot of money. So I think it'll be interesting to see when the bull run comes back, because as you said, it's not like this is bringing new users into the ecosystem. Yeah, but I think when people are here, I think it will drive more demand for some of these collections, and I think that will lead to higher floor prices. So I think it's an interesting question. Like, should you be accumulating a lot of punks and maybe a lot of apes, especially because I feel like the apes will lend themselves more to leverage for some reason to buy these things.
Yeah.
But will that be like an interesting investment thesis, and to maybe unload stuff before the inevitable like leverage blow up? But like I don't know, I could see it happening.
I'd like a second punk. So maybe if there's a D-Day.
Well, you can get one now for basically nothing.
Do you guys ever think about? I saw Ledger did a live stream with the Bankless Boys, and if you caught our episode with Ledger, he has a company called Flip XYZ. It's definitely an advanced NFT marketplace, but he talked about how he's building it for the future of NFTs, where they're not just JPEGs. They're maybe I don't know. They represent some other security, whether it could be a home or a ticket to something. I don't know. Do you think this is kind of like a buy now, pay later decentralization for whatever the future of NFTs are? Do you think that's true, or is this just going to be like a casino for JPEGs?
I don't know. I feel like most technological innovations, they all start out as casinos. Like this is a normal thing. They start out at the fringes but then they sort of gain mass adoption. I think like the mechanisms of doing lending on non-fungible tokens is like a thing that's never existed before in humanity, right? And so that has to get worked out, and it's probably best to work it out now with people trading monkey pictures who are just absolute degenerates than to just try to like work it out when we're lending on NFTs that are houses or something like that in the future. So I think it's good that this experimentation is happening. I think Blur is a really cool project. I think they've shown that they can build things. I think I like the UX. Some people disagree with me, but like I think they did a really good job on the UX. I think the platform was like a step forward from OpenSea in a lot of ways, and they clearly are willing to experiment and take risks, and it's like a good team. So I don't know. It's definitely something I'm considering betting on. Like I hate buying these things when they're just shitting tokens out.
Right.
Like
I mean, that's the whole model right now.
Like, yeah, so I don't know how good of a long-term, it's fun to trade because it's super volatile, but I don't know how much of a long-term hold it is right now. But there's definitely a point where it's interesting because like, I don't know, how else do you get exposure to generalized NFT without like speculating in NFTs, which is terrible. I mean, you've got Blur, you've got Flow, I know Armand likes, you've got Magic, Immutable X. What else is there? Do you know anything?
No.
It's not like that versus like the number of random coins you can buy is crazy. No, Pat, I have not played around with the OpenSea Pro UI yet, but I hear.
I didn't even know there was a
Yeah, they launched like a pro thing actually. This is a great example of why competition is good. They're just sitting there doing nothing with the worst platform for months, and then Blur comes in and shakes up the market, and we're deving. So look at all the deving we're doing. I'm deving. And now they have like a whole pro platform now. So, but I haven't checked it out because I still don't want to touch NFTs other than punks right now. But there will come a time,
yes,
where I return.
If it returns.
No, when. And
okay.
I shall return with it. Don't worry.
All right, you just gave me a little,
I don't know,
little spike of confidence there.
When
Yes.
With like the entire category beyond JPEGs, or when JPEGs return?
JPEGs.
Oof. Unclear.
If there's ETH profits, they're going to want to play with those profits.
Yeah, true.
There's going to be interesting stuff happening. Like I do think in the next bull run, you're going to start seeing a lot of crossovers between like established NFT brands and real world brands. Like, I don't know, maybe this has already happened and I'm just sounding like a moron. You'll get like apes wearing like Nike shoes or Adidas or something.
DeFi didn't come back. I feel like these are one-offs.
DeFi didn't come back with
with token prices.
There hasn't been another bull run since DeFi had the bull run.
Yeah. I mean, it didn't do well during the 21 bull run.
Right.
It went up like 10,000x and then it went down 98%, but it went up 10,000x.
The first one.
Each of these might be their own little one-off sort of technological, like, oh my God, this is the new thing, and everyone, FOMO's into it, and then it never quite achieves that same level of adoption, or because there's always the next thing. Like, I don't know if these are like crypto will come back, but I don't know if specifically each of these like specific compartments or components of crypto will come back. I don't know.
Okay,
Not in the same way, at
I think
least.
JPEGs will 100%. I made note during you guys were there obviously for the full NFT mania, which was crazy. And I actually made a mental note in my head. I was like, observe what you see happening around you with humans, because there will come a point in time where this goes to zero and you'll be like, this is so fucking stupid. I can't believe we did that. It's never happening again. But like I made sure to take a mental snapshot of what happened, and people loved the JPEGs so much. Like as much as we want to like put any sort of revisionist history on it and say we're not going to do that again, like history is just replete with humans doing the same thing over and over and over again and expecting different results. I think it will come back. It will probably look slightly different.
I don't think it'll be the same JPEGs that ripped last cycle. I don't think it'll be JPEGs. I think some JPEGs will come back, but a very small percentage of the JPEGs that like really thrived in the last run. And what will actually happen is a new class of NFT will capture most of the attention, most of the volume, but some JPEGs will survive. That's my take.
Yeah.
I don't know.
I mean, I'm sure we're going to have a lot more branded stuff coming to the market now. Like you're going to see like Adidas and Nike and Gucci. They're going to be, and they'll probably do it, I think, with a lot of thought and taste and care. I mean,
I don't think it'll be a JPEG though. I think it'll be like a membership. I think it'll be like tickets to this thing or that thing and the conference and the mastermind and then access to this and that. And then you get a metaverse character that's like this 3-dimensional, whatever the fuck. But like, it'll be different.
I think you're still going to get a JPEG and you're still going to get some avatar. Like people aren't going to identify with, oh, it's like a ticket. Like people still want to see.
They want the collectibles, but JPEGs are a specific part of the NFT market that is collectibles. Like there's other types of collectibles too that have not hit the NFT market yet. Like we haven't seen the ability to just like simply like physical collectibles, you know, like autographs and basketball signed by Michael Jordan. Like, you know, none of that is there yet. Like just that alone entering the space is going to be really good. But
I'm hopeful for punks. I think they'll be good.
Sure you are.
Yeah.
I hope.
I mean, I know punks will do well.
Yeah, punks and like a handful of things I think are going to do really well.
I think more stuff is probably going to come back than people think. Well, maybe some people are delusional. Actually, I agree that like I don't think it's controversial to say that like 99.999% of everything is going to zero. And I do think you will see like a whole new wave of like kind of low cost NFTs on stuff like layer 2s and Solana. It's going to bring like a different type of person into the space and be interesting to see how that happens. And I think you will have a lot of JPEGs with utility. Like I think like brands like Adidas and Nike will do creative stuff. They will launch stuff that has kind of the best of the JPEG world, but then also delivers you some utility. And then also you have this sort of like brand you can kind of piggyback on.
Yeah.
Instead of people trying to like build these things from scratch, like Anon on the web, which was always like a tall order, although some were able to do it. So I look forward to seeing what happens.
Bollock says NFTs will work because people are vain. Adeptus Crypto says we're in a digital world, so he thinks NFT PFPs have some legs still. I think I agree with both those.
People are
some kind of PFP for sure.
People want to show off, right?
Yes.
Yeah, we can rely on that always.
Super powerful.
It's super powerful, especially when the celebrities start slanging and I think that. What else we got here?
All right.
Cool.
Do you guys want to talk? Do you want to talk leverage at all, or do you just want to? We
can hit it for another one.
Yeah. Let's save it for another one. I like that episode. Feels good. A little short and sweet by our standards, but I feel my cup is full.
We hit an hour, dude.
We usually go like we go. I know. Good. I feel guilty giving the people only 60 minutes, but
guilty.
This was great. It was a nice little morsel. I'm excited for everyone to check out the next episode. Let us know your thoughts, and
Kevin Kelly coming next week.
Yep,
great episode. Had a great talk about it. Got pretty heady.
Wide
he fit in.
Yeah, he does that. I love it.
And then Eric will be back next week. Can't wait to get him back in here.
And
Yes.
we are trying to have the studio furnished next week.
Yeah,
We're
we got a lot
back
of
out. We're
deliveries.
back in the office today.
What were the names we got for the first shot of the studio we did in the other room? We got it looked poor. We got it looked like a terrorist holding
that.
cell, as if like we were
Steven
held
said that.
capture.
Yep.
What else did we get?
Um,
We got shamed.
I don't know. Stephen felt shamed.
Oh, I had like 5 people text me, being like, "Are you okay? Did you guys lose everything?"
It's fine. It's fine.
Wayfair takes a few days to deliver.
Yeah.
Give us a second.
That'll
Don't
be
tell
good.
them that's where you got the furniture. My God.
We bought,
Why, is it
we
bad?
bought giant thrones.
We bought everything
sit
from
on.
the Louis Vuitton furniture store. It's gonna look so good.
Wayfair's
It's gonna
great.
be like
We gotta
amazing. You're gonna love it. You're gonna love the chairs.
I don't like Louis. Fuck
Yeah.
Louis. Actually, I love Louis.
The
Louis
Dr.
just
Evil chair for Steven.
Louis brought on Louis brought on Leo Messi as their new face for the summer.
Yeah, I
Very
keep
happy
getting
about
targeted
that.
that ad.
Very happy about that.
All right,
All
cool.
right.
Well, let's wrap it there. If you have not joined the Discord, please do it. Please do it. There I am. If you have not joined the Discord, please. We've got threads now. The threads
I like the threads.
are fire. People are getting into the
Yeah, and
threads. We got all sorts of ongoing topics on everything from AI and health and wellness to charts. It's great.
Yeah, and if you like the NFT talk we did today, there's a NFT degeneracy thread, which is usually quite.
That's
quite
a good
popular.
channel.
It's a great channel.
great
great
channel.
thread. Great
What's your
thread.
favorite thread?
I like the Magic Lines thread.
Do you?
Yeah.
I've stepped into that twice and like
Just
immediately just
left.
stepped out. It's like that meme. Like, well,
The Homer backing back into
there's
the.
just and it's not because I'm just like, nope, not my channel. What's my favorite? I really like the Tech Talk. I think that's my favorite channel.
So much goodness in there.
Tech Talk
Anyway,
is great.
yeah.
I have one request.
No, we're still going.
Yeah, I have one. No, just closing request.
All
If
right.
you have not shared one of our episodes with a friend lately,
Oh, it's a good request.
that would be greatly appreciated.
Tell a
Maybe
friend.
this live stream would be great to send them to this live stream because we're going to be doing a lot of more YouTube. So
That's the plan.
would appreciate it.
Like, subscribe, follow Armand on OnlyFans.
Yeah, I'm off all the social media except OnlyFans.
All right. Well, thanks everybody.
All right.
Thanks, chat, for joining in. We'll see you guys next week.
Bye.
Bye. Love you guys.
Armand ASMR. I like it.